Hello everyone and welcome to our weekly global market outlook. I'm Tolga. Over the past week, equity markets continued to face pressure as consumer confidence dipped, inflation edged higher, and new tariff announcement sparked uncertainty. Looking ahead, we have an eventful calendar featuring key US economic releases, central bank decisions, and geopolitical developments that could set the tone for global markets. After logging gains on Monday and Tuesday, US equities reversed midweek, leading the S&P 500 to its fifth negative finish in 6 weeks. By Friday, the S&P 500 was down around 2.2% for the week, while the Nasdaq also declined and small-cap stocks moved closer to bear market territory. Sentiment fell notably on Friday after a University of Michigan survey showed consumer confidence dropping to its lowest level since late 2022, with most respondents expecting inflation and unemployment to worsen. On the inflation front, the latest personal consumption expenditures (PCE) data highlighted a continued rise in core prices, up 2.8% in February, lifting inflation above the Federal Reserve's 2% long-term target. This underscores persistent pricing pressure as the Fed decided to hold rates steady earlier this month. Meanwhile, gold prices continue to surge, briefly surpassing $3,100 per ounce, marking a roughly 17% year-to-date gain. Investors have clearly embraced the precious metal as a hedge against both inflation and macro uncertainty. Elsewhere, a modest revision to fourth quarter US GDP growth put expansion at 2.4%, down from 3.1% in Q3. Many economists now expect first quarter 2025 growth to remain below 2%. As for trade tensions, President Donald Trump hinted at new reciprocal tariffs to be announced midweek, adding to concerns that protracted trade conflicts could weigh on consumer spending, business investment, and overall economic growth. Turning to the coming days, Monday and Tuesday, investors will keep tabs on the Institute for Supply Management Manufacturing Index, job openings data, JOLTS, and construction spending figures. These releases will offer clues on how rising costs linked to new tariffs are affecting supply chains, labor markets, and the broader manufacturing sector. Wednesday, ADP's private payrolls report and factory orders data will provide an early read on March's labor market trends. Meanwhile, markets remain watchful for the official announcement of new tariffs from President Trump. Any surprising scope or timing could spark volatility across multiple sectors, particularly autos and consumer goods. Thursday, key releases include the ISM non-manufacturing index, the latest trade balance reading, and weekly unemployment claims. Taken together, these indicators will help gauge whether service-based industries are retaining momentum despite headwinds from inflation and cautionary consumer sentiment. Friday, the spotlight is on the US non-farm payrolls report. In February, job growth saw a modest uptick to 151,000, but still below last year's average. Economists expect March to show a similarly moderate pace, potentially around 128,000 new jobs. A higher unemployment rate, projected at 4.2%, would reinforce concerns about a gradual slowdown in hiring, especially if tariffs continue to weigh on business confidence. In summary, ongoing inflation pressures, deepening consumer confidence, and looming tariff decisions are at the front of market concerns. This week's data, particularly US jobs report, will be crucial in determining whether economic momentum can withstand these cross-currents. Stay tuned for further policy shifts and keep an eye on gold and equity style rotations as investors respond to changing market dynamics. Thank you for watching, and if you found this overview helpful, please give it a like, share your thoughts in comments, and subscribe for more timely market insights. I'm Tolga, and I will see you next time on our weekly global market outlook.